We're going to do a little bit of chart marking today. Been noticing there's a handful of you that don't know how to mark up a chart, so we're just going to go over some basics on that. Many of you have heard of support and resistance. Support is basically, think of it as like a floor that basically holds you up, and a resistance is a ceiling that is kind of like the top of where something might be. In this case, we're going to look at a couple support and resistance lines first. Typically, when you're going to mark up a chart, you want to look at a higher time frame, probably a 4-hour or bigger, 4-hour, or maybe a daily. I prefer the 4-hour myself. So let's just do a couple support and resistance lines just so you guys can get familiar with what that looks like. This is a Euro British Pound chart. 4-hour. We're going to just mark a few things up here. So if you have TradingView, some of this will look familiar to you. You can do this on your phone as well, or whatever kind of program that you're working with. You want to get a tool that will draw a line for you, just a straight line. And then we'll just pick a few strong points here. So in this chart, let's start high and work our way down. So this would probably be one here, about 905, 0.905. So we'll draw a line there. We'll draw a line about here at about 89. And then we'll draw another one right here. At about 88.5. We'll do 87. I'll explain these in just a second. Just hang tight. We'll do one about 86. We'll do about 83.50. And we'll do one more here. Let's do 85.50. Okay, so let me just go over a couple of these. So at the 905 range, notice that it came up here. There's one here that's got a really high wick, run up to about 92.250. We could even throw one in up there. That's an extreme case. And then we'll throw one more in over here as well. Just as a rule of thumb too, you'll notice most of these are really close to even numbers. This one's 83.5, this one's 855, this one's 86, 87, 88.5. They're not. These aren't exact. 89, 905, 91, 92.25. So those are all even numbers. Markets have tendency to like even numbers. So you'll see this is a resistance line. because it's resisting it from going higher. This is a resistance line. This is a resistance line. These are lines that at one point the market went up to, hit, and then fell again. At least twice, except obviously for the top one here. And then at 9:05 it did it. Down here at 9, this one is a support line. Okay, here's another one. This is it hit it here, and it hit it here. So that's pretty major. This line here, resistance, it hit it here, 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 a couple times in here, and it hit it here again. And then this one is a support line. It was a support over here, and you'll notice too that it was a resistance line here, but when it broke through and it came down, and it was a support at one point. Got some both support and resistance there. A little bit there. There's a resistance line. This one broke through a little bit. It went up, but it came back down right there within a candle or so. Got some resistance there at one point, and then down here you've got some support as well. So those are just some lines you could use as support and resistance lines. That's the first thing that you want to do. You want to mark it up on a big chart just so that you know. And once you mark it, you want to leave it so that you can go back, and that chart's already marked up. You don't have to go back to it a second time and remark all those up. So that's one way of marking a chart up. And then there's some of you have heard don't ever trade against the trend. So I'm going to show you what trends look like. Trends are basically market direction, where price is heading. It could be up, it could be down. Sometimes it could be sideways. You'll notice too that, like for instance, here's a trend. I mean, there's trends everywhere, but I'm just going to mark up some of the easy ones. So this is a trend. Okay, you'll notice that this was kind of the bottom of a channel. Okay, a channel is basically a top and a bottom point where a market is heading between a specific period of time. So you'll see that this channel here, once it came down, this became the bottom point, and then it would come up. You know, it would get close to this line here. It would stay within this channel. It would bounce back and forth, back and forth, back and forth. Actually, let's move this channel down so it looks cleaner. Sorry guys for the slowness of the computer. There we go. So you can see that it just kind of bounced between these 2 points. You've got a channel here. Obviously there's a channel here. Long channel here. This was actually a really long channel, just kept going up and up and up, and then it started to come down, and then this is a downward channel. Okay. Sideways channel. This is kind of a sideways channel. If you wanted to look at this in the big picture, this would be an accumulation period, and then it would come up, and then it would hit up here, and then they would start to distribute. So that's a little bit of channel and trend. Here's a little bit of Fibonacci. Some of you have heard of, seen and heard people use different Fibonacci and a lot of measurement. Fibonacci is essentially, it's a measurement tool. It's based on math. Nobody wants to waste a bunch of time doing math, so let's draw a simple fib here. So fib, you want to go to a low point and then draw it out to the high point, and you want to have some basic basic lines in there. Like you want your 23, your 38, your 50, your 61, and your 78. Some people like to have the 87 as well. So let's kind of look at what this is. So from this bottom point here, so here's what it looks like fixed. So you draw it from a low point when there's been a really high gain, and you can kind of watch things as it comes down. But you'll notice there's levels here. So your first level's at the 23. Notice that it kind of ranged across here. It came up, it hit it, and it fell back down until it finally came back up. It broke through. It kind of went sideways here. It broke through again, went up to the 50. Within 2 candles, it broke back down, came all the way back to and bounced off of the 23. And then it slowly made its way up. There's a little bit of hesitancy. It kept bouncing off of this 38. It went up, broke through the 50 again, and ran all the way up to the 78. Came back down, and it bounced a little bit off of the 61 here, pretty close to it. And then it saw the 78 as resistance before it finally broke through, hit the 100, and then as it came back down, it bounced off the 87, went up a little bit, broke through, fell hard to the 61. It broke through, but it came back up, and then it kind of went back down, and it kept bouncing off that 61 line before it broke through again. And then it kind of bounced off of the 50, between the 50 and the 61. Then it broke all the way down to between the 23 and the 38, and now it's making its way back. It made its way back up, and now it's back down again. So that's kind of a way to measure fibs, measure levels of both support and resistance. You want to keep an eye on how it breaks through those levels and what the significance of those levels is. So this was just a short basic training on marking up a chart. There's a lot more to it. There's harmonic patterns. We can go over that in a different session. Basic fibs. There's a lot more to fibs. There's a handful of the teachers that know how to explain fibs better, but this is just the basics, so you can kind of get a grip of it. You can Google it too and look for more in-depth information. But these are the basics. The teachers are here if you guys have any questions. Or that's all we're going to cover for now. Just something to add to your things to study for now. If you guys have any questions,